Welcome to this family law software webinar. Today, we'll be going over property division. I'm going to start out just talking a little bit about data entry, and then we'll go into the property division tools that we have in family law software. I'm joined today by my colleague, Anna Tate. I'm Nancy Schaefer. We are both attorneys and family law software product experts, and we will be happy to answer your questions during this if you put them in the Q&A. If we don't get to your question today, we will, if you don't do it anonymously, we will try and get back to you afterwards if we don't get to your question today, or I will stay on for a few minutes to make sure we get to everybody's questions. All right, let me share screen. Here we go. All right. So we are looking at family law software in the cloud version. And I have set this to be Colorado. This is the sample file that comes with the program. And we are in the state of Colorado. And I'm going to show you one thing that is only right now in Colorado and Florida, but it could be coming to other states. And that is we have plan mode and form mode. So if you look up in the top right corner next to the PDF icon, you will see it says now in plan mode. Now I'm going to switch it to forms mode. Forms mode is to make it easier for just doing the raw data entry to fill out your state's financial affidavit. And it will take away, keep an eye on the analysis and reports sections. When I change to, let me just go to enter data first. And when I change to plan mode, it's going to change the data entry categories to more closely correspond with the categories on your financial affidavit. And you will also see that the analysis and reports tools disappear. They're still there. I'm going to switch back to plan mode, and you can see that reports and analysis are back. They didn't go anywhere. They just don't show on the screen. So if you ever open it up and say, oh, where's my analysis tools? You might be in forms mode. So we're going to run today's webinar in plan mode, which is more like what every state has. And I'm going to be focusing on property division. So we're going to look at assets and liabilities. In some states, it's called assets and debts. Same thing, debts are liabilities, liabilities are debts, just different words. So on our assets and debts page, we have at the top data entry options for the page and our categories of information. You can enter data in this program in any order. If you want the forms mode to enter in the order of your financial affidavit, we have that. Or you can enter the information this way. Now, as you're entering information, you will see that you can also enter some cash flow items, which would normally be income and expense, but they go along with the asset. And so we have the ability to enter them here. And remember, you only have to enter data once. So when you are starting to enter the data and you enter, for example, the real estate, enter the mortgage and the monthly payment, that monthly payment is then going to show up as income and expense information. We can also go, for example, to bank accounts and other information. And here, if there is going to be an income component, let me just scroll up a little so you can see this column is annual income. And I put in some income for this S&P 500 index, getting a pretty good return there. I only wish that were the case. But now that income is going to show up as income. Now, the key is that the program won't know who to assign that income to unless you assign the asset. But then the cool part is if I assign the asset, in this case to Taylor, then that income is also going to get assigned to Taylor. If I only assign 50% of it to Taylor, then 50% of that income will be assigned to Taylor and 50% to Blake. So that will impact your support and maintenance data as well. So if I go to support and maintenance data and I look at additional income, there will be income from investments, for example, and that $9,000 is being showed 50-50 and will impact child support. If I change it to 100 to Taylor, it changes the support amount. So we're going to stay with assets and debts and data entry. You can, the nice thing is you're only entering information once. So as you enter it, it's there for use for any of the other purposes. And we're going to talk about some of those today. Now, as you're entering data, you will see this green box and these blue boxes. The red box is fairly self-explanatory. The little trash can means delete. The blue boxes are for footnotes. And when we're entering assets, because there are income items or expense items with the asset, so even though this says asset, it's assets and liabilities. This says income, it's income and expense, depending on where you are. If you're in a debt, then obviously it's an expense. And you can do separate footnotes for each category of the items. So that really is helpful for footnoting and telling the story that you want to tell in the footnotes. I always think of footnotes as being persuasive, their purpose. Sometimes they're to memorialize things. And of course, when you do put in a footnote, you can make it a reminder that won't print as a footnote, but it's to memorialize a question or a fact that's internal. You can also mark the value as estimated, which is very helpful when you don't know exactly how much is in an account or how much the house is worth and so on. But the main thing that I want to show you here is the more info screens. So the more information is context sensitive. The assets and income footnotes are the same throughout the program. The more information screen will change depending on what kind of information is needed for that asset, liability, income, or expense. So if you click on the green box, you will see that for investment data, we will ask for things like data valuation, income. We will also ask for the tax category of the income. And then importantly, for some of what we're going to talk about today, this is where you would put in the tax basis. So that can sometimes be hard to find. Clients don't have it, but if you have it and we have untaxed capital gains or the sale of a house, then, excuse me, or any property, it can be important what the basis is. Okay, let's go back to assets and debts. I'm also going to show you that you can reorder. So let's say you start putting these in and then you say, you know what, this one is joint and this one is Blake's and this one is joint. And then you say, oh, wait, I want to put these together. I want the joints to be together. So I can click on the reorder list, the little up and down arrows here, and then I can move the stock fund up so that it's in the order that I want. I had someone ask me that question the other day. That's why I'm including it. Okay, so the more info screens are important. The other thing I want to show you in data entry is that there are probably subpages, often subpages within the more info screens. So as I look at the more info screens, I can say, oh, click here to view the calculation of marital equity. And it's going to take me to another page with some more information. And sometimes those are really good and helpful, useful pages. So for example, in the first mortgage, I can click here to see more info and the mortgage amortization. So now it's going to give me the mortgage amortization. I can also click here for the calculation of mortgage interest deduction. So all of these subpages can be helpful to you as you move forward using the program. Okay, so let's talk about now, you've got all this asset and debt information in here. What can you do with it other than just printing out a financial statement? We go to the analysis section of the menus, and here under property, we have a number of selections. So let's start with the first one, the divide property. Now, what I like to do with the divide property is show a bar chart to begin with, because the bar chart will show me that there are assets that are not yet allocated to either party. And then it's going to give me a running total of the marital equity in the program of how you've divided the property. So you can divide things either by, wait, I'm going to go in and just change an option here for a moment. Okay. I am going to put in the bank, let's say the Bank of America. I gave it all. Oh, yeah, I made some changes in this file. There we go. Okay. So here we have this $90,000 stock fund that's not allocated. So I can allocate it either by percentage, 15%, or I can allocate it by dollar amount, and it will automatically calculate the other side of the equation. I like to think of this as sort of a spreadsheet on steroids. You can never break it, and it's always going to give you the right number, the right percentages. We do round. So other than that, though, everything is accurate. And so I can move things around by dollar amount or percentage, and it will immediately make a change to the percentages up here. So I still have one unallocated asset of the Toyota. Let's say that's Taylor's. Okay, now all the assets are allocated. But you can see I've got 81% of the assets going to Blake and only 18.7% going to Taylor. Probably not how this is going to end up. So there's a number of things that we can do at this point. This divide property worksheet becomes the actual property division. This is what is going to show if we go to the reports to the marital property division report. Right now, let's stay in the worksheets, and I can say, okay, what do I have to move? How much do I have to move? So I can go to my first option here, is show how far the parties are from 50-50 or any target percentage. So I click on that, and now I get an equalization amount line. And this will tell me at 50%, Taylor needs to have another $141,000 of assets. I can leave that as an equalization payment if this is the property division that they want, or I can start moving things over to give her more money. And as I do, that number will change. Now, sometimes I don't care as much about the overall percentage, but I want to do a percentage that will show subtotals for asset classes. So we can break it down by non-retirement, retirement, and debt. And then, of course, separate property. In this case, I have separate property going from Taylor to Blake. That is something I did playing with this program another time for a user. So we have here 50-50 on retirement, and then essentially 60-40 on the other assets. Maybe that's where I want to end up, or maybe I want to move some things around some more to get a different percentage on the other assets. Sometimes, like here, we did more debt. Sometimes you want the debt to appear on the sheet, but you don't want it to come off of the target percentage overall. So you can do it this way. I find it very helpful occasionally. This is what I need to look at. Okay. Now, the other thing is we have here more options. And the more options allow you to show separate property and marital and separate totals. And if I did that and went back, now we can see marital and separate. So here's Taylor, here's Blake, and here's marital. And we can see that there is some separate property. And what does that look like? Okay. So, and there are 3 options there that you can show items individually. So even though they're separate property, they're going to show on the worksheet. And I can even show details. The thing about showing all of those is that it's going to be too much for the program to show in the window. So you may have to print and see the other columns. But here we go. So this is the separate property and the marital property and the percent of marital that we're allocating. Okay. Now, once you've done one run through of the balance sheet, sometimes that's not enough. Sometimes you want to look at other options. So we do have side-by-side options in property division scenarios. And these property division scenarios, you can do side-by-side scenarios. And let me delete this one and I'll start over because I don't remember what that one is. So here we've got, we'll say 40-60 on the house. Whoops, 40. Oh, because it's all non-marital. Hold on. I need to change this to make it not show the non-marital. It's going to work better now. Okay. So now I've got the house and I can change that division. It's all going to so let's say, we'll call this one house to Taylor. And then I can do something else here in another scenario. I made the house non-marital. I'm sorry. Let's go to another asset. We'll go to the Bank of America. So BOA Taylor, and we'll call this one BOA Blake. Okay. So here I'm going to give Taylor the Bank of America on this one, and I'm going to give Blake Bank of America on the other one. And I can do side-by-side scenarios. I can even do a scenario where I change the value. And that change in value changes percentages and numbers. And sometimes that's one way. I'll show you another way to do different values in a moment. But here you can do side-by-side scenarios. You can do as many as you'd like. I can take this one and say, I want to copy scenario 2. Then I'm going to do a second one with that $400,000 value. And it's still going to be Bank of America to Taylor. Okay, and whatever other changes I want to make in this balance sheet. Now, when I'm done looking at different scenarios, I can reorder them by swapping. Let's say I want to swap scenario 2 and scenario 3 in my page. I can swap this for scenario 3, and it's going to literally flip those 2 columns so that you can see what the 2 differences are. These are the same. And I can also swap for the actual. So as I said, the actual is what is going to show on the divide property worksheet and on the report of marital property division, which is sort of your end report of who's going to get what. And so let's say I'm going to swap this for scenario 1 rather. So I'm going to swap the actual with scenario 1, click OK, and it's going to literally flip those 2 columns, including the labels. So that's why you want to label these columns so that you know what you did in each scenario. And now this is going to be the actual. Okay, so that is one of the property tools that I use most often, is this side-by-side scenarios, especially in mediations or collaborative cases where we are talking about who's going to get what. And remember that there is a difference between the allocation and division of assets. So if you want it to be a certain allocation, but a 50-50 division, you can go back to the divide property worksheet and include the equalization amount in your reports. Okay. Now, there are other options to select here in terms of property settlements. So when I am entering data on my assets and debts, one of the things usually at the bottom of our list is property settlement. So this would be that equalization payment payoff, or maybe a maintenance buyout payoff. And you put in the amounts, you put it, determine whether it's a reimbursement or not. Is it, do we want it to be part of the budgets? If you're doing projections, that might be important. And are we charging interest on it? And if so, is that interest going to be taxable? And do you want to include that in net worth projections? So for those who are doing those net worth projections, obviously you want to mark that if you want to include it in both of their cash flows. Okay, so that is property settlement between the parties. Now, in that property division scenarios in the analysis, we can also look at property after tax. And property after tax looks at the value of each of the assets individually or the overall division based on the taxes for 2 different types of tax scenarios. The first is marginal tax rate at retirement. What that is going to do is part of the data that you're putting in, if you have entered it, would be their birth date, the anticipated date of retirement, and that will also look at how long they're going to be working, what that income is going to look like at retirement from assets, and calculate what the tax rate will be at that time. And we are looking at the marginal tax rate, meaning the last dollars in on retirement. So that marginal tax rate for Taylor is 12%. And interestingly enough, for Blake is also 12%. And then we get the second thing that we're looking at is capital gains rate. That is a current number based on their current incomes. And capital gains is less for lower income parties. There's 2 different rates. So for Taylor here, she is going to have no federal capital gains tax if the asset goes to her. But that also may change her income and add it into the capital gains rate. So there may end up being capital gains if she cashed it all in at once and it was enough to be taxed. And then also federal. So Blake here has a 15% federal rate. Now, interestingly enough, the capital gains rate tax won't work unless you have the basis of the asset. So just keep that in mind. And as you are going through, so here we really, the reason why this is a 12 and 12 is because I didn't go out enough years to project for taxes. So I can go quickly to my settings, assumptions, and change the number of years for cash and net worth projections. And I'm going to change that to 50. We can do 1 to 50. And now when I go back to that analysis after tax, it will have taken that into account. So those blue help notes went away. And then we have detailed explanations of the taxes for all of these assets. And here in the individual assets, you can see the different tax rates and what that's going to look like for the parties. So you can see what the difference is. So if you're only doing one asset that you want the tax rate for, you can see it in the detail. If you're looking for an overall, instead of, let's go back to the divide property, instead of 3366.9, we don't have a lot of tax here. It's going to be almost the same. We went in tenths of a percent difference in this scenario. Sometimes there will be a much bigger difference in your cases. Okay, now, so we have some other more, if you go into the more page, we have 3 here. The equalization payment is just a way to show in a graph what that equalization payment looks like and the dollar amount. You can do the percentage. This part of it here, the enter the target percentage, is the same as on the divide property worksheet. The percentage same, but here we have a graph in case you find that that is more helpful and more persuasive to your clients, opposing counsel, the court. We also have a property valuations page, which is really cool, especially for settlement conferences, pre-trial conferences, or even in collaborative when you have different values. So here we have Taylor's value, Blake's value, and value to use. We have all of the assets, and I can set options. So I can say the value to use, let's use those as Blake's values. Okay, and now I can go back, and the blue, the calculated values are for Blake. The same numbers, excuse me, are here for Taylor, but we can change them. So let's say Taylor thinks it's worth 400,000. Blake thinks it's worth 350. And then the value to use, maybe the court is going to recommend 375 because that never happens. And then so you have a worksheet that's dynamic that you can even use on your tablet or laptop in court, in court, or on your desktop in Zoom, but be able to show these right away and what that looks like. So those are really helpful worksheets. We also have one for untaxed securities gains. So you can look at equalizing that or putting all of that on one side. And again, that depends on what the basis is. If you don't have the basis, you don't really have a good calculation. So that is our property division. I don't see any questions. Let's see. Somebody wanted to know. Yes, so similar. This is exactly the same in the cloud and the desktop. The only difference is that instead of the menus being on the side, on the desktop, there are tabs on the top. But substantively, it's exactly the same. Okay. All right. Thank you all. I appreciate your attendance today. This video will be put up on our YouTube channel, and we'd love for you to subscribe. You'll get notice of each of the videos for this webinar series as they are presented. We can give you proof of attendance for you submitting for your own continuing education credits. Okay, just reach out and contact us. Thank you all so very much.